What an incredible year. Bitcoin has more than doubled in 2024. The same what it did in 2023, by the way, right? It also more than doubled during that year. Now what's going to happen next? That's the big question. Now I'm currently in Japan, and in Japan the weather is very different to Malaysia. In Malaysia it's eternal summer, it's always warm. Here in Japan it's currently snowing. Now that brought me to an idea. How much seasonality is there actually in the Bitcoin price? Does it make sense, for example, to sell in May and go away? That's a very common saying in the stock market. How well does this apply for something like Bitcoin? Now here are the yearly performances. We went up in 2024 by 119%. We went up in 2023 by 155%. There seems to be somewhat of a pattern: positive return, positive return, positive return, negative, positive, 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 negative, positive, positive. And now you can try to complete. Positive again in 2025 and then negative in 2026, potentially. In case you're new to this channel, you might not know about the following chart. I think it's very useful to find historical buying opportunities. This is the realized price. So this looks at the average cost basis of all holders in Bitcoin. So we look at what price on average did a Bitcoin move in the past. And whenever the market in aggregate is in losses, so when the current price is below the average cost basis, that's historically a very good time to buy. That tends to happen after a major correction. So usually more than 50%. Sometimes it takes even 60%. Now currently the realized price is at 40,857. So the market in aggregate is still more than 2x in profit. Now, I'm not saying that we're going down to that level again, but as time continues, the average cost basis goes up. And that means that in case we do see a correction, we are likely going to fall less. Because again, whenever the price is below the realized price, selling pressure tends to diminish. Now, why does it tend to diminish? Because when you believe in Bitcoin over the very long term, right? When you believe that Bitcoin inflates less than fiat and that at some point in time Bitcoin will recover, then when you're currently in losses, you're less likely to sell, right? You simply just keep on holding. However, when you're currently more than 2x in profit, you might consider selling some Bitcoin, right? And maybe buy something else, say a down payment on a house, or maybe use it for consumption, right? It's a very different psychological anchor point. Whenever somebody buys something, it's always a question, what's the current price relative to the entry position? We are all not looking at absolute prices, we are all just looking at the current price relative to our entry price. That's why the average cost basis of the market, or the anchor point of the market, is so important. And most people are still happy with where Bitcoin is right now. Once Bitcoin falls below the realized price, that's then when people call crypto a scam. That's then when you actually want to buy, when people lose hope. But right now the party is going on. The Bitcoin price is above the 120-day simple moving average. So that's the best moving average historically. If you wanted to time the market on a more short-term scale, so you're buying into Bitcoin whenever the price is above the 120-day simple moving average, and you try to be out of the market or even short Bitcoin whenever the price is below the 120-day simple moving average. So 120-day works the best for Bitcoin historically. That's currently at roughly 78K. So once we fall below this, we might go all the way down to the realized price, potentially. As long as we are above, things are medium term still somewhat bullish. At least that's what the backtest of the best moving averages say. Now let's go back to seasonality. When within the year does Bitcoin do its best returns, and how strong is that effect? Let's look at this in quarters. So Q1, Q2, Q3, Q4. The recent past is at the top. So 2025 is over here, and the beginning of Bitcoin is at the bottom. Now the effect is not super obvious, right? There's not a single quarter that's always green, but there are some interesting aggregate metrics. We've got the average return and we've got the median return. Now the problem with the average return is that it can be very much skewed, especially from performances at the very beginning, right? Q1 in 2023 had a performance of more than 500%. And so when you then average this out over 12 or 13 years, you still have around 40 percentage points or so that this average gets skewed by, just because of this single data point. That's a problem with averages, right? They might not be that representative of what's happening today. In the early days, Bitcoin was just a few cents, and so it's way easier for it to 5 and 6x within a single quarter. Now that's not that easy anymore. And so what I think is more representative of the quarter performance is the median return. Now what's the median return? The median is you look at all of the data points and you simply just take the data point in the middle, right? So the data point that splits the worst half from the better half. So what's more or less typical. And so then we see that Q1 on average isn't necessarily that great. In the early days, we had several Q1s that performed very poorly. In the recent past, we had Q1s that were very strong, but it is a pretty much mixed picture. When we stay with the median returns, we can see a clear outlier. We can see Q4. So Q2 has 7% return, Q3 has negative 1% return, but Q4 has 52% median return. There was only one very weak Q4 and that was 2018. All the other Q4s had been pretty strong. If there were losses, they were quite modest, relatively speaking. And again, the last 2 years were very strong for Q4. And so how much seasonality is there? It's not really that clear to say for Q1, Q2, Q3, but it seems like Q4 on average tends to be very, very good. Sell in May and go away might not make that much sense, but buying at the beginning of September and selling at the end of the year tends to be pretty good. It tends to make pretty much all of the gains throughout the year. So for Q1, Q2, Q3, you might simply hold something else than Bitcoin. Of course, if history is any indication, nobody knows if this will continue. But let's then zoom in a little bit into Q4. Can we maybe refine this somewhat? So let's have a look at this on a monthly basis. Let's not look at the average returns. Let's instead look at the median returns. Here we can see why Q1 also performed quite okay. It was because of February, not because of January. January is relatively weak, but let's have a look at Q4, so the last 3 months of the year. It's mainly because of October and November. December tends to be not that strong. Isn't that interesting? So little performance in December, little performance in January, but February is strong and October, November is strong. And when we look at the recent past, this is also aligning with exactly that effect. October, November had been very bullish both in 2024 and 2023, and February had been incredibly bullish in 2024 as well. In 2023, not much happened. We saw that Q3 on average made negative returns. Why is that? It's because of August. People tend to be selling in August. And again, for the recent past, this was also true. So in 2024, 2023, 2022. So what seems to be happening is that the seasonality in Bitcoin gets even stronger over time. It seems like investors look at this more and more and they seem to act accordingly. When most people tend to be selling during the summer months, especially during August, then this becomes a self-fulfilling prophecy. When people tend to buy during February or during November, October, that also tends to be an effect that reinforces itself. And so just based on that, we shouldn't have too much hope for January. Maybe we even see a bit of a decline like in 2022. It would definitely be in alignment with the long-term trend because the current risk of Bitcoin relative to its reward is very, very high. And the 120-day simple moving average also gives potential room for a bit more of a correction. Maybe we're trending down for the next month to then see another rally in February. If we further decline and we're approaching the 120-day SMA without crossing it, then I'm going to get back into the market again. I sold quite a lot of my Bitcoin at 98K. So declining prices are now in my interest. But of course, I don't want to miss another rally and I don't want to miss a potentially positive February. And we are still with positive momentum, even though, of course, we are not at historically low prices, right? We're simply just riding the current wave. And so my personal approach is to be somewhat risk off right now, to have some money on the side, to have some money in risk off assets, to then be able to buy the bottom in case we see a bottom forming. Now, I've made a lot of tutorial videos on how to manage properly a portfolio and how to not get wrecked in case we go down. There's more than 100 tutorial videos in the premium membership of this channel. It's down below. It's thebitcoinstrader.com. And of course, besides the tutorial videos, we also have dedicated chats where we discuss the current market of Bitcoin, but also of various asset classes as a whole. So feel free to check it out. There is a 1-week money back guarantee. So in case you don't like premium, in case you don't learn enough, in case you don't get what you're looking for, then feel free to simply just message me within the first 7 days and I'll refund you 100%. So looking forward to seeing you in the next video or seeing you in premium. Cheers!